Happy St. Patty's Day, accounting students. Welcome to week 2. As you can see, I'm celebrating the day by wearing my lucky green shamrock shirt. So I hope you're having a little fun today and enjoying St. Patty's Day. But I hope you're also working on your accounting homework. So let's start about talking about week 2. Before we do, I just want to say great job, everyone, on week 1. You did, most of you have posted your introductions and we threw a lot at you, and we hope a lot of it some of it will stick, but trying to introduce you to the whole world of accounting in 1 week. Now we're going to back up and kind of start at the beginning. And we're going to start this week, we're talking about transactions. And the basic transactions start with debits and credits. We'll be discussing that in discussions. You'll be working with debits and credits in your homework. And you're actually going to learn how to do journal entries if you've never done those. And really, it's not that hard. We talk about the accounting equation that assets equal liabilities plus owner's equity. And that'll make more sense after you do the reading. Hopefully you've already been introduced to that concept, maybe in high school or an earlier accounting class. But don't be afraid. Follow along the book. There's some great examples. I don't think you'll have any trouble with your homework if you just follow the samples. And we will have you analyzing transactions because the transactions are the very starting point to build our financial statements. So you saw the financial statements last week and shared the financial statements of several companies. Great job finding Edgar and finding interesting things and the connections between the 4 statements. This week's email, as a matter of fact, I'm just going to go ahead and share my screen and show you. Let's see, which one do I want to share? I believe this is the right screen. Okay, here we are in Blackboard. You should recognize this, and we're in week 2. The title of our lesson this week is Business Transactions. Let's see, I might flip over to a different tab. This is my announcement that I'm about to post with this video. And I start out each week, now that we're in week 2, with a kind of a recap of the first week. One of the things I wanted to show you in my recap was this little graphic that I've posted right here. And I'm going to move it out of the way. And it is showing the flow of information from balance sheet to the statement of retained earnings to the income statement. And you'll see these connections. I asked the question about where are some of the common numbers between the statements. And that's how these numbers, they all are integrated and work together to create one big picture of the health of a company. And so this is really what we're trying to do, is learn, what do these statements tell us if we look at them. And especially investors want to know this information, bankers want to know, and managers need to look back and see the trends that are painting a picture for them so they'll know how to make adjustments going forward to improve their outcomes. Well, after you read my little recap, we'll jump right into week 2. And this is where we get into the nuts and bolts of accounting transactions, starting with debits and credits. We also introduce you to the accounting equation. But I wanted to show you this little graphic that I posted. And I made it on my spreadsheet. And I highlight it in blue right there. It's from the balance sheet. I've got different accounts, assets accounts, liabilities, owner's equities. And in total, I'm looking at each account and I'm putting their balance. So if they have a debit balance, it goes in one column, the credit balance goes in the other. And if you move all those balances over here into one column, the credits become credits, the debits, and if you add them all up, they become 0. So this is a kind of a visual reminder. If you took all the accounts in a chart of accounts and their balances and added them all up, they will always equal 0, because that's the whole idea, that the assets have to equal the liabilities plus the owner's equity. So every accounting transaction has at least 2 sides, a debit and a credit. You may have 2 credits that add up to the 1 debit, but they always have to balance. Otherwise, you can't make the entry. And your books will be out of balance. So makes sense, right? So you'll learn a little bit more about that. I've written down your assignments here. We're going to be reading chapter 2. Last week was chapter 1. And I want you to watch some videos. If you're not a big accounting person, let's say you're a marketing major and you're having to take this course to graduate, I understand. So you probably need to watch some of these videos. I find watching the videos, it does help. make it stick in my head. So there's one on journal entries and there's one on T accounts. And you find these videos, I have the links right here, but if you look over here on the sidebar in Blackboard, there's something right under discussions called additional resources. If you click on that, that's where you'll find all these helpful videos. So if you're not really up on it, you might want to watch the videos before you start the homework. Let's see. The other thing I wanted to say, okay, we've got 7 McGraw-Hill problems this week, and they're worth 40 points. And then the serial problem is worth 10. I know that a lot of you tend to skip the serial problem because you think it's only 10 points. But when you add up 10 points over 8 weeks, it's significant. It could be a letter grade. So please don't skip any of the problems. At least make the attempt. At the end of the week, on Sunday at midnight, if you've done half the work, at least you'll get half the credit because it'll automatically be submitted. And so you don't expect to come back on Monday and see your problem still available to you. It will already have been submitted. So please get those done before midnight. There's also 2 discussion questions that when I mentioned, I think earlier, we're going to be talking about debits and credits, and we're going to be talking about journals versus ledgers. And then in the journal versus ledgers, I actually am challenging you to go out and find a picture, a photograph, or a screen, just do a screenshot, either from the book or from an article, or Google, search the web, of a journal and a ledger. I want to know that you know what they actually look like. Now, these days, most of our journals and ledgers are handled in a computer, but there are still companies using manual ledgers, and they were books. And we could go back further than that and talk about green bar paper, but I won't scare you on that one. It is St. Patty's Day, but green bar paper was how they did all their transactions and how they came up with their financial statements. So a lot of pencils and erasers. But now we have spreadsheets that do all the hard work for us and accounting software. So, all right, well, that's really all I have. I just wanted to say good luck this week, and I really hope you have a great week of learning something new.